the oil minister clearly has indicated that Indian consumers, they should be prepared to shell out more, and the government is committed to fix the subsidy issue. But what is refraining the government from biting the bullet, and what is the best way to fix the current subsidy problem? Let's discuss that with an expert, Mr. Kirit Parekh. Mr. Parekh, good morning. Thank you for joining us. Mr. Parekh, first, there was a denial. Now there is acknowledgement that the subsidy issue needs to be fixed. But after the acknowledgement, there is no action.
Yeah, I think certainly the very fact that there is an acknowledgement is big progress. And I do expect that we will see some action in the next few days or few weeks. It's quite important to recognize that not doing anything is even more inflationary than raising price of diesel, for example. A study we have done at our institute, IRADE, Integrated Research and Action for Development, clearly showed that if you don't do anything, the inflation 6 quarters down the line would be higher, growth would be slower than if you were to raise diesel prices. Now, what is the way out of it? Clearly, the current level of subsidy on diesel is around 9 to 10 rupees. And that also there is a difference between excise on petrol and diesel, which is also around 7 to 8 rupees. So what the government perhaps feels reluctant to raise the price of diesel by 9 rupees at one go, and has talked about raising prices 1 rupee every month. I think that is perhaps a feasible proposition. I would have liked a slightly different approach to it, which could have said that, look, we are going to deregulate diesel price. The companies are free to set the diesel price to correspond to the cost of procuring diesel from the international market, and that but we will give a subsidy of rupees 9 per litre, fixed per litre subsidy. What that would do is that the market price, the petrol pump price, would not change for the consumers, but any changes up and down movement of international prices will be passed on to the consumers. The consumers will get slightly used to the idea that diesel prices are not fixed forever, that they can change. And gradually, instead of raising 1 rupee price, the government can reduce 1 rupee subsidy per litre every few months, or as and when there is an appropriate movement of international prices. That could, in my opinion, prove less troublesome in terms of political sense, because then the prices would be determined by the oil marketing companies, and people would have gotten used to changing diesel prices as the world market price changes. So that is a feasible proposition to me.
Right. Mr. Parekh, this budget, 2013, the government may, in order to raise their revenues, perhaps look at reimposing duty on crude oil, according to reports. How do you view this particular possibility?
Well, I mean, I think if they want to reimpose duty on crude oil, which is, I think, at a very low level today, it does make sense to raise it slightly. Maybe I think it's around 2.5%, and can be raised to 5%. I don't see that would be much of a large burden on people. What I think is also need to be done is that the difference between petrol and diesel price has to be brought down, because unless that is brought down, all kinds of distortions take place. People are buying more diesel cars and so on. So if one way to do this would be to reduce the excise duty on petrol by, say, 4 rupees and raise the excise duty on diesel by 1 rupee. It would be revenue neutral, because we consume 4 to 5 times as much diesel as petrol, and that can really bring down the difference between the two prices to make it narrower, so that the incentive to buy diesel car or consume diesel instead of petrol, even when it doesn't make economic sense from a logical point of view, would be reduced.
Mr. Parekh, one of the international brokerages, CLSA, and a very prominent one at that, says that there is a high chance that the government may leave it on the oil marketing companies to absorb much of the subsidy burden this year in order to limit their share of the burden. If such a situation pans out, do you see that hitting the financials of state-owned companies hard?
Absolutely. I think this would be a serious problem for the state-owned companies. For example, ONGC's burden for the first few months has been this year has been of the order of about 26,000 crores. And what people are talking about is that 50% of the additional burden would have to be borne by ONGC. That would lead to ONGC's subsidy burden to going to 90,000 crores for the whole year. And I think that would be certainly very harmful to ONGC, its ability to invest abroad, its ability to invest in exploration. And if you also see the financials of the oil marketing companies, they would also be in serious problem because once they don't have money to buy things, they will have to borrow money from the banks at a high interest rate. So I think that would certainly be maybe you can dress up your budget in a cosmetic way, showing that look, my fiscal deficit has come down. But in reality, it would be the same thing. The stress on money supply, stress on interest rate, etc., would have the same impact whether it is borne by public sector oil marketing companies or by the government. So I don't see any macroeconomic gain from that.
Mr. Parekh, but do you think the root of the problem is that we don't have a strong energy policy in place? We are a growing country. Our energy needs are also growing. So subsidy can take care of the current problem, but we don't have a proper plan in place which will take care of our future energy requirements. There is hardly any big exploration plan in place, or if I look at what ONGC or other E&P companies have done, they have not managed to explore too much from global markets.
I completely agree that currently it seems that that our energy policy is somewhat in a state of suspension. We had in the Integrated Energy Policy Report that I was chair of in 2005-06, we had recommended that a good energy pricing policy would be to have a competitive market-driven prices for all energy forms. Now today we don't have that, and as a result we get all kinds of distortions. And look at what is happening to coal. Coal today, last year we imported 100 million tons of coal. Because India imported so much coal, world market prices shot up, and we spent up an order of $10 billion additional for importing that coal. Now, on top of that, the 12th five-year plan projects that we will be importing nearly 200 million tons of coal in the last year. Now, we have the coal reserves in the country, resources are there. We are not able to make, even in 4 or 5 years, we can't produce 200 million more tons of additional coal. It is really a sign of a poor ambition, or you could say our ability to deal with the environmental and other management and governance issues in this sector. And I think it is high time perhaps we denationalized coal and permit private players into the system. And this applies not just to oil and coal, but it's going all over, even power sector. One of the major problems that we find is that there are states which have surplus power. They are not able to sell it at a reasonable price even to other states who are deficit, because the state electricity regulatory commissions under the influence of state governments have not allowed pass-through of increased cost to consumers. As a result, the state discoms do not have the money to buy the power that they need to meet their consumers' demand. So there are problems at all sectors, all energy subsectors.